Joining me now is Eric Criscuolo, market strategist for the NYSE. How are you?
Great, Ashley. Thanks for having me on.
Welcome to the show.
It's great to be here. Yeah, happy Thanksgiving.
Happy Thanksgiving. Yeah, so we are, almost 30 minutes away from the start of trading. What are you looking at most closely in today's session?
Well, it's Friday and it's a shortened session, obviously, but we've seen strength in the past several Fridays. So we've closed out the past several weeks on Fridays being up. The S&P 500 closing up for the day. So we're going to look to see if we can continue that streak. It's kind of helped keep the moving averages, or keep the S&P 500 above the major moving averages for a while now. So that's obviously going to be something that we'll be looking at closely, especially with the holiday shortened / low volatile / low participation rate, because a lot of traders are off right now. So the trading desks are kind of lightly manned today.
All right, and what do you think will determine if the rally is sustainable entering December?
Well, I think there's a lot of things going on right now. There's always a lot of things going on in the market, but especially this time of year, you want to see kind of the AI trade continue, because that has just helped the markets get to all-time highs this year, and it's kind of showing a little bit of a changing of character, whereas before it was everything related to AI was up and it just rode higher. Now you're getting a little bit more of market segmentation, where certain stocks in the AI trade are still benefiting, certain stocks are kind of pulling back a little, but just you kind of want to see that broad momentum continue going into the end of the year. Maybe a healthy rotation into some of the other sectors, calling out healthcare. Healthcare has been really strong recently, and it's a big sector as well. So that's something that could, keep the markets going higher. If some trades kind of rotate out of some of the AI names, you can go into healthcare now maybe and continue that momentum going higher. But the big market event is probably the Fed meeting in a couple of weeks, December 10th, I believe, on Wednesday. That is what everyone has circled on their calendar as a big market event going forward.
Yeah, that decision will be coming out. You're right, December 10th at 2 p.m. Markets seem laser focused on this decision. We are seeing September economic data rolling out late because of the government shutdown, of course. What do you think they're going to be looking at in terms of data when they make that decision?
So a lot of the data they're going to be getting is old data. They're going to have to discount that a little bit, at least. But they will still look at it because they want to see kind of how the economy was moving, into all of this anyway. So it's going to be important, but maybe a little less important than it usually is. They have been leaning a lot on their local contacts. So each Federal Reserve president, oversees a region, and those regional contacts, the business owners that they talk to on a regular basis, those contacts, those discussions will be very important as far as what are you seeing? Are you firing people? Are you hiring people? Are your prices going up or moving down? Those discussions are definitely going to be important for them. And then we'll also see a lot of them, or we have seen a lot of them already kind of lay out their case for what they're thinking going into the meeting. The markets have broadly kind of repriced everything to thinking that there will be a 25 basis point cut in the December meeting. That's kind of largely priced into the market, not 100%, but largely. And so that's where everything is kind of positioning right now. Probably, assuming they don't surprise there, the biggest part of it is going to be Fed Chairman Powell's commentary on what happens after December.
Yeah, what do you think people are going to want to hear from him, after that meeting?
Yeah, it's really going to be interesting because he's coming to the end of his chairmanship. He will be replaced. If you haven't heard, there's a lot of talk about who will replace him. Some of the top names are now kind of bubbling out in market reports. So he's probably not going to say anything about that. But the larger market press is going to be focused on who that next chairman is going to be, or chairperson is going to be. So that's going to be kind of a broader topic. But I think for the discussion after the FOMC meeting, it's going to be about the guidance going into 2026. What we're hearing a lot of is they're going to cut 25. They're probably going to cut 25 basis points, but they will kind of push out future cuts or maybe talk down future cuts going forward, at least until the data that's coming through becomes more consistent, until they get a firm handle on the mix between the old data and the new data, until things kind of settle down in that area. I think they're going to be they're going to be cautious as far as how they want to portray that to the market, because they definitely don't want the market to get over their skis as far as thinking there's going to be a lot more cuts than what they're kind of thinking internally.
Yeah, and almost 87% of traders are now pricing in that rate cut for December. That is up dramatically from a few weeks ago. And when it comes to rate cuts, how many moves are investors anticipating into 2026, do you think?
Yeah, so you have the January cut kind of almost priced in. There's kind of a few more that are priced into 2026, but those are going to move around a lot. And especially if you get someone that becomes the chair of the Fed that is more leaning toward the administration's point of view, so which is probably going to happen just because of who's leading it. The search, Treasury Secretary Bessent is leading the search. Obviously, he's tied to the administration. So you're probably going to get maybe somebody that's a little more dovish as far as pushing for rate cuts. So maybe the expectations in the market kind of reprice for more rate cuts in the future, but there's still a lot to be seen, and a lot more data has to come through. So we'll kind of see where that lands. But right now, it looks like there's at least a couple more cuts being priced in.
All right, Eric Criscuolo, market strategist for the NYSE. Thank you so much for joining us.
It was my pleasure. I hope to be back soon.
Yes.